What's up everybody, Tom here with another video. Today we'll be talking about the latest stock market news, along with our technical analysis thoughts on the S&P 500, NASDAQ, gold, volatility index, and Tesla. The stock market is now at a really critical level. Will we see follow through bullish moves after the last couple of days, or further bearish downside? Let's take a look together right now. Stay tuned. So as long-time viewers of this channel will know, one of the ways that we try to simplify the stock market together is by looking at a S&P 500 heat map for the last 24 hours. Here we have one from finviz.com, and it becomes very clear straight away that it was all about the tech sector yesterday and the general favorites during this crisis. Of course, Microsoft, Apple, Google, Facebook, and Amazon all had good performing days, and the NASDAQ overall did quite well when compared to the S&P 500. The technical analysis on the S&P 500 though is what we want to be focusing on today. It's hitting a seriously critical level, but overall it's still a bit of a mixed bag through most of the sectors. Banks, healthcare plans, energy still beaten down, and the real interest comes in when we look at some of the key indicators to do with market strength or market weakness. One of those is of course the dollar index. The US dollar is on a tear. So it is broken past the key resistance that we've spoken about for many weeks here and come out of its accumulation pattern. And this was, of course, the 93.84 into 94 zone. We've now seen it break through and close above the 50 exponential moving average. And the market structure down here is a great example of what happens at the end of a downtrend into accumulation and then of course breakout. And you can see how aggressive even during the Asian session when this is recorded that this particular pattern is right now. Now in terms of expectations, usually you take the distance of course the channel itself, and that becomes the self-fulfilling prophecy, and we expect usually a little bit of dollar index strength now for the next couple of days, if not weeks. So we might see dollar index strength, dollar index weakness, test the resistances, find support, and then of course move upwards into the 95 and possibly even 96 zones where it will find previous technical supports, and that will act as resistance in role reversal. So it's a really good lesson in structure, and what this is telling us is really that there could be a bit of money moving out of some growth assets and moving out of some of the markets and going into dollar index. Dollar index is of course a hedge, and we always see that people look at this as a safe haven bet. So there's other things at play, but that could be one of the things that is causing dollar to get so strong. The volatility index or fear index is also always a great indicator of market fear or of course market strength. And right now we're seeing a very similar pattern to what we saw over here on the left-hand side. We've mentioned that a few times. Basically we had that initial spike, initial downturn, and then we expect decent spikes throughout the next point. Now, we may not see spikes like this in the VIX, and that's just because we may not have that 3 to 5% flash crash. But at this point, basically the VIX is stuck between two moving averages. We're stuck between the 200 simple moving average on the daily and the 2050, which are just sitting on top of each other, which is where the VIX is right now. So anything can happen on this VIX, and it's of course still a very volatile market because it's above that 20 zone. On to copper. If we're talking about market sentiment, obviously copper is an important one, still looking quite bullish. It obviously broke out to a new high, the 3.1 earlier this week, and at this stage it's still holding this 20 exponential moving average. But where the real interesting points come in is when we look at things like, of course, the put call ratios, and here's the CBOE put call ratios. S&P 500 put call ratios are getting very high. We're sitting at 1.92 now. This always annoys me when this happens, because if you're looking at the bearish side and you start to see put call ratios go really, really high, it often means that everyone's thinking bearish and that the market's done or the bottom is in. You actually want this to be showing you often the opposite, because remember, when everyone's doing something, for people to make money in the markets on options, usually they're doing the opposite, as in like they're pushing the market lower when people are of course looking at buy calls. We saw that only just a few weeks ago when the euphoria was in the market overall. So the put call ratios are showing us that there potentially could already be a bottom in because they're getting quite high. What about sentiment in the markets overall? Well, of course, we saw Tesla's stock go down 7% according to this article, and it's actually even further down after hours. But the battery day innovations remain off in the future. And really, we were signaled this by Elon Musk himself in that tweet we discussed in yesterday's video. If we take a look at Tesla after hours, we can see here that it was $4.24 and then it went down $29 after hours to $3.95. So volatility is certainly in Tesla, and it really opens up the next support lines that we were discussing in yesterday's video. Let's just take a quick look at what's happening on Tesla. So I guess if we actually open at those lows, we're going to see the double top pattern. We're basically going to see those 450 highs be the high point. We've got, of course, our intervening trough here, and we've got really a zone here where we expect it to go right back down into the 360 where the 200 simple moving average is. We know that that was picked up last time. We also have that really strong structure around that 330 to 340 zone, which we discussed. And I think that's probably the key point that we're looking at in the market right now. Now that, of course, the hype is out of the market in terms of anticipation, we expect Tesla to come a little bit down to earth. It looks like it was in that blow off. We talked about that in yesterday's video as well. And we could see Tesla all the way down to the 330s, 340 zones where previous resistance may act as support. It would become quite a good key area considering that the hype could be out of this stock right now. I guess lessons that we can always learn together on this is that this buy the rumor, sell the news kind of events really do happen. And mostly we can tell that usually when a stock bucks the trend into it and possibly goes to such a high euphoric level that even if the news was amazing, it's very unlikely to get any more out of it. So you might only see 5 or 10% upside, and unfortunately there could be 10 to 20 or even 30% downside on that particular share. That becomes a risk reward. Is it worth taking the risk for the reward? Sometimes it's not. But obviously long-term holders, they'll be pretty comfortable maybe with the announcement, and long-term they might be just looking at buying the dip on this particular stock. So before we go over to the markets themselves, just want to quickly talk about gold. It continues to slump here because, of course, of US dollar strength. We spoke about the key level yesterday and how the market had come up to that zone. That was the 1920 zone. We saw a quick tap of that zone followed by shorting pressure, and we still expect this to probably find further shorting pressure as now it looks like we're going to have dollar strength for a little bit more time. If we consider where it obviously went into the previous body closes, which just shows you how great body closes are. So when that flash came through on Monday's trade, we saw it flash straight into the 1880. Previous body close was picked up very, very quickly. We expect probably the market to try and test those levels again based on that dollar strength. Also, an interesting point is that we're starting to see, of course, this 20 moving average catch up. So at some point, we might even see it touch the 20 moving average and then further sell off from that point. Makes sense. Everything looks pretty technical here on gold. And unfortunately, if you're a long holder, it's really about dollar index strength. And that's what's affecting this the most right now. Onto the broader markets, what are we seeing on the NASDAQ? Well, the NASDAQ really is showing us a bit more strength than necessarily in, of course, the S&P 500. We've got still the two key zones being, of course, this 11.5, 11.6 area. And if we break high on that, I still maintain that is the full bottom is in and we're on to potentially new highs. It's really a very strong signal if we get through that zone. We found the mini resistance last night though, the 50 exponential moving average, this blue line, and the two previous resistances around that 11.2 area. The 11.2 area is now selling off, and on this 4 hour, if it closes like this, we might even get an engulfing candle, which is relatively bearish, and we might see it go back down and test this 1100 zone. The S&P 500 though is showing the best technical, and it shows the most considered level right now. Of course, the US 100 has a lot of hype in it and a lot of buying. People want to get into Apple, people want to get into Amazon, Google, etc., all of those others. But if we have a look at the US 500, it's actually at the massive critical level, and that critical level is now the 3310. So we've got previous support here on the markets. We've got basically this 3310 acting as support, the 1, the 2, and the 3 times. Now, anyone that has been watching the channel for a while would know we love the 1, 2, 3. We love this area. We always love it when there's multiple touches to a zone. Then that touch becomes a point where a 20 exponential moving average touches, and we see, of course, the market react with that zone. Notice how previously the 20 exponential moving average has acted as resistance throughout this selling. We know this is a very strong moving average, and it's acted as resistance here. It's acting as resistance potentially here. And this is the point where if you're a market bear or you're someone that's looking at buying a dip, you need it to hold this level. You need it to sell off this level ideally give us a lightning bolt structure where we get, of course, a peak, a trough, a lower peak on the smaller timeframes, and then a sell-off event. A new low would signal at least into 3,200, if not even further down, considering the moves that have happened recently. But overall, this is the zone where the market will now make a decision on whether it wants to continue its bearish move downwards or whether it wants to go bullish. And right now in Asian trade, we're seeing a 33.05 handle. So we're actually seeing a little bit of weakness after the close and after the bell. If we jump onto a daily, it still becomes pretty apparent that we have not broken any key levels up. We've still got the close low, obviously the wick that came off that zone. We've got the body that came up to this point, and we've got the two moving averages acting as dynamic resistance as well, since they were dynamic support, of course, all the way through the bullish run. Remember, this is still the first time we've been through a 50 exponential moving average, which we are now fully under since the entire crisis began. We have not been under that moving average for quite a while. So I still think the body closes are pretty significant here, and it would take really Jerome Powell or Congress most likely to create a catalyst for the market to go up. The only other catalyst we'd be able to looking at is, of course, us. If we all put puts on the market and we all make it so that it's very profitable for Wall Street to take our money, unfortunately, that's what Wall Street will do. They will push it to a new direction. They'll push it up just to take the money off us. It is the way the market moves, and it's super unfortunate, but it's the way that often things are done, and that's the nastiness of Wall Street themselves. When we consider the 1 hour, because it's worthwhile dropping down to these small time frames, we can see also how critical this point is. We are above the 20 and the 50 exponential moving averages. Both of them we haven't been above throughout this last selling point. But right now, we're just about to see them cross together. So we really want to see probably the Asian session into the US session today be weaker if we're looking at downside. For bulls and for bull side kind of calls and everything like that, where are the critical levels? Well, I still think there's a critical level around this 33 kind of 70 zone where we had previous resistance. Similar to the NASDAQ, if it gets through that zone, it's showing bullish intent, but it's still all about this 34, 26, 25 area. Previous resistances, we break through there. It's really signaling not only is the bottom completely in at that point, but the market will most likely then move to all-time highs. The thing is, we already know that there's that stat when the market made a new high over here back in August into September, that pretty much signaled bullish intent over the next 12 months. Remember, we know on average markets return around 8 to 9% over the next 12 months after they make new highs. So if that is true, and that is what we're going to see here, if we get through these resistances, I think very big bullish intent will come in. We'll have a whole bunch of moving averages all acting as dynamic support at that point, and that would be incredibly strong. So for now, it's really looking a bit bearish. This is the critical point for the markets. And of course, it's really worthwhile paying attention over the next 24 hours to the actions on the market. If we see selling into tomorrow's close, obviously that will be very bearish for the markets. If we see huge buying and it pushes through into the close, that's quite bullish for the markets. The close is the key. It always will be. And at this stage, that's where Wall Street really places most of their trades. If you've enjoyed this video, please make sure to, of course, consider subscribing and hitting that alert button. Just a quick shout out to the trading community. You guys have been supporting us so well recently. It's been amazing. So big thumbs up to everybody out there. And a reminder, we're giving away $520 to a lucky subscriber just for subscribing on our road to 20,000. We'll do that draw live, and we'll do it during our live stream. So if that's something that interests you, make sure to subscribe. Happy trading, everybody. Good luck out there, and I hope the markets move the way you need them to over the next couple of days. Bye for now.